To understand the importance of journal entries, we must first understand the basic accounting process. So let's look at the steps in an accounting process so we can get a really nice rough idea on what we're getting ourselves into. The first step in the accounting process is to identify and record business transactions, after which we post them into a journal, following a ledger, trial balance, and finally, the final accounts. A journal is the first book in which business transactions are recorded, and hence it's called the primary book of entry. We already learned the golden rules of accounting and a few more stipulations in a previous video. Revise them if you want to, there's no shame in relearning things. Here's a quick reminder of the golden rules of accounting. Remember that we follow the double entry system, which means that for every debit there is a corresponding and equal credit. Let's look at a journal now. This is a journal. It has 5 columns. Here, transactions are recorded on the basis of dates in a chronological order. In the third column, we note the ledger page number to which transactions are transferred. Don't worry, we'll learn this soon. The debit amount is recorded in the fourth column and the credit amount is recorded in the fifth column respectively. An important thing in every journal entry is narration. No entry is completed without a suitable narration being provided. Narration is required to be mentioned below the entry in round brackets, giving a short explanation of the business transaction. Most narrations start with the word being, and to keep different entries separate, a line has to be drawn after each journal entry. Now, let's look at this problem and try to solve it. They do say application is the best way to learn things. Know that business terms is equals to accounts, for example, rent account, cash account, etc. Let's see if we can pass the journal entries for these following transactions. Pause the video and read through it once. The first transaction on January 1st says that the proprietor commenced business with cash 80,000. The accounts here are a real account and a personal account. So we debit what comes in, which is cash, and we credit the giver, which is the capital account. Hence the transaction we pass is cash account to capital account, being J. Sali commenced business with cash. The second transaction is that we deposited cash with the bank 40,000 rupees. The accounts affected here are a real account and a personal account. Hence, we debit the bank, who is the receiver, and we credit what goes out, which is cash. Hence, we write bank account to cash account, being cash deposited into bank. The third transaction is that we purchased goods by paying cash 5,000. The accounts affected here are a nominal account and a real account, so we debit purchases and credit cash. Hence, the entry we pass is purchases accounts debit to cash account, being goods purchased by cash. The fourth transaction is that we purchase goods from Lipton & Co. on credit 10,000. The accounts involved are a nominal account and a personal account. Hence, we debit all expenses and credit the giver. Hence, the entry passed is purchases account debit to Lipton & Co. account, being goods purchased on credit. The fifth transaction is that we sold goods to Joy and received cash 11,000. The accounts affected here are a real account and a nominal account, so we debit what comes in and credit our income. So the entry we pass is cash account debit to sales account, being cash sales made. The sixth transaction is that we paid salaries by cash 5,000. The accounts involved are a nominal account and a real account, so we debit our expenses and we credit cash. So the entry we pass is salaries account debit to cash account, being salaries paid. The seventh transaction is that we paid Lipton & Co. by check for purchases made on 4th January. So the accounts affected are a nominal account and a personal account, so we debit our purchases and credit the bank. So the entry we pass is Lipton & Co. account debit to bank account, being payment made by check. The eighth transaction is that we bought furniture by cash for 1000. The accounts involved are a nominal account and a real account. So we debit our expenses and we credit what goes out, which is cash. So the entry we pass is furniture account debit to cash account, being furniture bought for cash. The ninth transaction is that we paid electricity charges by cash 1000. The accounts affected are a nominal account and a real account. So we debit our expenses and credit what goes out, which is cash. So the entry we pass is electricity charges account debit to cash account, being electricity charges paid. The 10th transaction is bank paid insurance premium on furniture as per standing instructions 300. The accounts affected here are both personal accounts, so we debit the receiver and credit the giver. So the entry we pass is insurance premium account debit to bank account, being insurance premium on furniture paid. And that's about it for journal entries. We're going to do ledger really soon, so stay tuned.